Hi,
Hey, Paula, how are you?
good, and you?
I'm doing great.
Hi, David.
Hello, hello. How's everything?
Great.
Can you hear me?
We
Yes,
gotcha.
Oh, okay. I wasn't sure you were able to hear me.
yes. We're going to start shortly. I'm gonna start by sharing. Bill, do you have to jump out like before you?
No, I'm good. I'm all done with what I need to do, so I'm in good shape. So
Okay, good, good. Because I guess we just start.
I like your background. Go Vegas, go. David, where are you?
I'm actually in Chicago, but I'm looking to buy something in Vegas.
Okay.
Yeah, I'm tired of the cold.
Yeah, we have a lot of that, don't we, Paula? A lot of people moving from that Chicago area.
Yes, yes, we do. So glad you're here. You're in the right place.
Oh, thank you. Appreciate it. Looking forward to today's meeting.
Great. I went too far. Far. Okay, so let's start. It's exactly the time. So hi, David. This is called the Las Vegas First-Time Home Buyers. And what we're talking about today is don't make these costly mistakes. And for that, I have an expert here, Bill. So he's a lender partner. And today we have this agenda where you're going to know who we are. We have some client testimonials and we have some mistakes. We're going to show you some mistakes to avoid during purchasing a home. We're going to have some Q&A and we're going to be able to schedule one-on-one appointments with the expert here. A little bit about me. I'm a real estate agent. I was first licensed in 2021. I've been living in Las Vegas for 11 years. I love to help people become financially free through real estate as a vehicle. And I'm a team leader and I'm a great negotiator. I have a team of other agents and I have a great partnership with the lender that he will be present for questions in case you have any. And he will explain a little bit about the programs that we have currently. I have some client testimonials that you can actually check on Google reviews. And there are actually real-time clients that continue to buy homes with me because I believe that relationship has to continue even more so after buying your home. Okay, I'm going to admit somebody else. Hi, Gabby. Hey, G baby. Hello?
G, G baby.
G baby, I'm sorry.
I love it. I love it.
Good name. Um, I mean, you're free to, you want to turn on the camera? You want to say hi? Hello? Okay. So, mainly like when you are a first-time buyer, how do you feel? Like, I think it's a little bit nerve-wracking when you're buying your first home because it comes with a lot of stress and a lot of concerns or you're uncertain of what you're doing and you're anxious because of course it's money. And I know that with the wrong information, it cannot end up very well. So that's what we hear today. We have some steps to show you the process of buying a home. It's a lot of, this is like a simplified model where you come to this class is the first step. And thank you for being here because that is the most important thing, like getting the information. So once you decide at least you have the information. And then you get an approval with our mortgage broker. Then you go house home with your realtor, and then you move into your dream home. Well, I created this slide. It's a little bit confusing, but it's all the steps and the behind scenes of what happened when you're buying a home. And you see like the people involved in the process. And you have a seller, and you have a buyer, that is you, Mr. Buyer. You have a lender. That is very important because like we need the money and all the programs. And you have an agent, and also the seller will have its own agent. So it's like a team, like a game where you have two different teams and a referee that will be like the escrow company that will be overseeing the whole process to protect you from step one to the end where you're actually getting your key for your house. We can go all through the process, but I would like to explain as a buyer all the steps that you go through buying your property. And the first thing is like, once you go to the lender and he gives you a pre-approval, which we're gonna go more in depth with Bill in that process, then you go with me and we go house hunting until you find that home that is your dream house. And we make an offer. And then if that is the house that you truly love, we move forward with the EMD, which is an earnest money deposit that will ensure the seller that you are serious about your commitment. And it's my duty as a real estate agent to protect this money from day one. So then until the end, there is different steps where we have an inspection and we have then an appraisal. We're gonna go a little bit, ahead, so we don't stay here and we're gonna go through the other steps. But at the end, you are protected, and by having a team on your side, all of this is not as complicated as it looks. So right now, we're gonna go through the mistakes that people do when buying a home. And the first one is that people don't check on which programs they qualify for. And that's what I have here, our expert that can definitely like tell you what programs are out there right now that might help you in your purchase. And now I think this is Bill.
Yeah, I was going to ask David. So David, are you like moving here to be your primary residence? Are you buying it as an investment property? What are your thoughts on your move to Las Vegas?
I'm looking at it being my primary residence. Yeah, I just want to change. It's time for a change. I kind of outgrew the Windy City, you could say.
Yeah. Well, Las Vegas will welcome you with open arms, right, Paula? There's a lot of great growth here that's happening, and it's pretty good. Are you currently a homeowner?
No, I was a while back, but I'm renting currently.
You're renting currently, and then when you move, are you do you work remotely? How about your source of income?
I'm an insurance agent, but I'm working remotely, so that's one of the things that's making me decide to move.
That's huge now. I mean, with that whole COVID thing and the work from home and being able to work remotely, it's ideal. So I do loans throughout the country myself. I do live in Las Vegas, like Paula, and but I do loans in Utah and California, Nevada, and certainly in Las Vegas. Have you gone through the pre-approval process before?
I've yeah, when was a previous owner. It's been like wow, maybe like 10 years ago, and then so I haven't gone through it since.
Yeah.
But
So
um,
it's probably, so I've been doing this 32 years now in the mortgage side. I was a commercial real estate appraiser for 7 years, and I've personally bought and sold 29 homes with financing. So every time I buy a home with financing, I pull my hair out. That's why I don't have any hair anymore. But but it's, it's not that it hasn't changed honestly all that much since the time I've been in here. We look at it from the standpoint of credit, income, assets. Those three things is what you need from a qualifying standpoint to get pre-approved. And we'll take a look at your credit. We'll then look at your income, what that income is, and then we'll look at the assets, as fancy word for money. How much money do you have for down payment? And then kind of put that puzzle together and go through basically a mortgage calculator. I don't know if I can pull that up for you.
Yeah, I stopped sharing so you can
You
share.
got it. Okay. I'm going to send request. Okay. Give you that. And I'm just going to show you kind of what I walk through from a mortgage standpoint. I'm assuming you will be wanting to get a mortgage. Is that correct?
Correct. Yes.
Yeah. So let me just pull this up. So you can see my screen, correct?
Yes.
So essentially what we will do is we'll go through what I call essentially the CIA analysis, credit, income, and assets. And I liken it to a three-legged stool. You need all three legs to make a stool stand. And sometimes you need those three things to get a mortgage, and those are the three legs. So if one leg's shorter than the other, whether it's the income isn't enough to support, or the credit has some things that need to be repaired, or you need more money for the down payment, we'll go through those three things. That'll identify the different loan programs and down payment options that we have. It'll allow us to establish a target price. We'll talk about interest rates, which is really just a placeholder now. David, as you know, the stock market, interest rate market, and being in insurance, I'm sure you've seen the financial world a little bit, and it's been a little bit volatile, but right now it's just a placeholder. They're right around, just under 7% on a conventional and around 6.25% on an FHA type loan. And then we would take you shopping. So Paula would, kind of pull up some homes that you would like, and we would run some numbers on those homes that you would like. But it's a really basic, I try and do it in 5th grade math as best as possible, right? And so we would just go through, talk about your credit scores. If you're going to have a cosigner, we would determine your income. If it's commission, if it's salary, whatever it would be. And then we would go through your credit in regards to what debts you currently have now, car loans, current mortgage, credit cards, student loans, personal loans, whatever you may have. And then from an asset standpoint, again, that fancy word for money, we would look and see what kind of monies you have for down payment. And as Paula will tell you, being an outstanding realtor, is that the sellers are really providing incentives to buy right now. We're really headed in, we're in a transition market, and it's amazing the types of incentives that sellers are providing right now. A lot of seller paid closing costs, right? Paula?
Yes, they are. They're very motivated. We have more homes in the market than years.
Yeah.
So we are very excited because right now, like, you actually can find a house that you love, know what is left, know what, what is available, but something that actually will match what you're looking for. And we also have 2 people that join Bill.
Okay. Chase Gang TV, I see that. And Peggy, how are you guys today? I'm Bill Gaylord, and obviously we got on Paula's webinar. Whoop. There we go. And so then from there, what we would do, David, is, oh, go ahead.
New Dell AI PC.
Yeah, a little. Okay, there we go. So then we would basically try and determine what your max mortgage payment would be. And then we would go figure out with that max mortgage payment, it could be what you qualify for, or it could be your personal budget. Many times the max mortgage payment, you can qualify for more than your personal budget. So we would just go through those details. We would determine, the interest rate, and then figure out what the taxes and insurance would be, whether you do a down payment and FHA. Do you have any idea what kind of price range you're thinking about, David?
No, no, I want to see what I qualified for.
Okay. So I'm just going to throw in just some numbers so you can kind of see what I do. But we would do it on a private basis. We would go through your numbers independently. But let's say, for example, if I had someone, I would look at their FICO score. I'm going to do something real quick here. Paula, we'll just save it as that. So I can just plug in some numbers and so you can kind of see what we do, right? So we'll get here. Let's say somebody was making $6,000 a month, right? We would take $6,000 a month. Many times with good credit, if they had a FICO score, say of 740 and above, you can, definitely get a debt to income ratio potentially that would go higher. And meaning that this particular buyer could spend approximately $3,000 a month on all credit, house, cars, credit cards, all that. Let's just assume that they have a $400 car payment. They owe about, let's say, $10,000. So we would pay that. And let's just say they also have a credit card. Let's say they owe $5,000, and let's say their minimum payment is $125, right? So we would then do that. And so then we look at it and we go, okay, we would take your max monthly debt less the expenses. So this person could potentially afford to spend about $2,500 on the house. Then we would look at cash in bank, whether they had any kind of stocks, 401ks, also very usable for down payment and closing costs. Many times people have a super friendly family member that they can get gift funds from. They may have a collection of some type that they could potentially sell. Some people are waiting for tax refunds. So we explore all the different types of down payment. And at the end of the day, we could potentially have down payment assistance if you qualified for down payment assistance. So in this case, I'm going to say someone has $12,000. And please stop me if I'm going too fast, because I did just keep going or ask questions along the way. So in this case, what I would say is if we go to about 350, real estate taxes in Las Vegas are pretty low, as Paula can attest to, for some of the older homes. Some of the newer homes, they lower interest rates, but the older homes, the real estate taxes are a little bit low. So in this case, we would look at probably a payment somewhere around this level, $2,500. It really meets that type of, basically this person would generally qualify for that type of loan. And then this is where Paula comes in, and she would pull up properties in Las Vegas, and then we'd put the numbers to the property. So any questions on that? I know I kind of went through that fast.
No, it's pretty straightforward.
Okay. So I'll turn that back to Paula, and you can go from there. Is there anything else that I can show you there, Paula, that would help?
Well, the calculator is great. I think that there will be other questions to see if any of the participants are, service members, teachers, all of those programs. Where can they find them if they were to look for those programs?
Yeah, so we have, I work for Cross Country Mortgage, which is actually the #1 retail lender in the United States. And so we have all the different types of programs. We've got down payment assistance. We have VA, FHA, conventional. There are teacher programs, doctor programs. There's what's called non-QM programs, where that sometimes can be great for self-employed borrowers who have 1099 income or are reporting on their tax return. So a non-QM basically is a specialty loan program or a niche product. It stands for non-qualified mortgage, meaning it can't be sold to Fannie Mae or Freddie Mac. So, but we have all those types of programs too.
Awesome. And all, we talking about like the grants, you probably know this better than I do. About first-time buyer grants, do they have to be paid back? We have like different questions regarding how did they qualify for those? And also about forgivable second mortgages. And yeah, you already talk about down payment assistance.
Yeah, there's a number of programs that are available. Let me see if I can pull it up for you. And let me just pull this up and so you can see it.
Oh, on the back. Okay. I just don't know where my screen went.
I don't know if I can share this or not.
Oh,
There,
I'm
I guess
sorry.
I took over your screen.
Yeah.
So if you go to homeispossiblenv.org, that generally has some of the guidelines on what you can qualify for as a home buyer. It does have some income limits. It does have some credit score. Let me blow that up a little bit. That's pretty small. It's like, oh my God, I can't see that anymore. So it does have, some credit score qualifications. You can press here and that'll show you how much income, if you meet the requirement. There are sometimes income limitations. Some people make too much money to qualify for the down payment assistance. There is different types of programs on how much you can get. There are seconds that can go in place where they do not have a payment, they do not have anything, but it acts as a second mortgage. It's not forgiven until basically it has to be paid off through either a refinance or you sell the house. So, but it allows you to get money for the down payment. And I'm doing one right now with somebody who they had some gift funds fall through, and now they're using down payment assistance for the monies for the down payment and closing costs. So it's not a full-on all your money to get to. You're going to probably need additional money in addition to the down payment assistance, but it's certainly something that can be looked into.
Okay. That is great. And do you have any questions? Is there anything that we can answer?
One of the questions I did have is you mentioned earlier about 1099. I'm not self-employed, but I get paid 1099.
Yeah. So, whoa. My phone is ringing. Hang on one second. Okay, there we go. Sorry about that. Did you hear that? My phone was ringing. Anyways, so great question, David. So when you are 1099, paid by 1099, you are technically considered and classified as self-employed. So what we would look at would be your last 2 years tax returns, what you report as reportable income to the IRS. So a lot of times when you're 1099, you got that top line as gross revenue, but then you have maybe your office expense or a car expense or your home office or whatever, and you basically write off expenses. And what we look at from a qualification standpoint is the number that you report to the IRS. Does that explain it?
Yeah, you're referring to like the adjustable gross income?
Yes, the AGI. Yep. Yep. There are, if, for some reason, it's interesting because I've been doing this a long time. So I think the government knows that people that are 1099 many times write off a lot, and they don't really consider it. Well, there's loan programs out there where there are potentially 1099 niche products, if you will, where they base it off of the 1099 less a little bit of a deduction. So those, are out there as well. But ideally, those types of programs are going to require a larger down payment and a higher interest rate. Those are specialty products. the goal for us is to try and get you qualified with your income on your AGI, your adjusted gross income, and so that we can get you into an FHA or a conventional mortgage.
Okay. Right. Makes sense.
Great question, though.
Right. I mean, the only thing that comes to mind is, like, what would I mean, I would like to know if I qualify for one of those down payment assistance, or I hear a lot about those grants that are being given to like, first-time home buyers.
Yeah, so I would go to that website, the Nevada Home or the Home is Possible. I think it's, let me just pull that up again. Let's see what that is. Whoops. Where did it go? I think I just deleted it. Okay, let me get there though. So let me pull this up again, and you can kind of find out whether you qualify or not. So we'll pull this up. So you can get up to 4%, right? Usable for down payment and closing costs. This is a non-forgivable loan. It says attractive 30-year fixed interest rate. It's not as attractive as they promote, but it's a little bit higher than what interest rates are, but they, of course, put that in there. And then if you see here, if we press here, purchase price and income limits, right? So you can press that and it'll go to, for example, if you're buying in Las Vegas, so we go to Clark County right here, you can get to 544,000 in terms of a purchase price. I'm sorry, yeah, purchase price of 544. And then the maximum household income is 102,000 for 2 or fewer. And the maximum is 117 for 3 or more people. So those are kind of the basic requirements of it. And then, you know, and again, we're doing one right now.
Okay.
Did that help?
Yes.
So home is possible nv.org. And you can kind of take a look at that. And then, you know, I've got people on my team that are very astute at working on those programs. And we can certainly help out in trying to figure out whether you qualify.
Okay.
And
Okay.
sorry.
No, say that's good to know. I just, for me, everything, all this is new. I mean, not new, but
Well, it's been 10 years, so probably a lot has changed a little bit for you.
yeah, that's what I wanted to see if there's anything the same or different, or well, pretty much just get an idea of what I need to get together.
And what I'm gonna share another thing for you so that you can basically, let me just get there real quick. And then this way, if you wanted to, you could set up a time to get together via Zoom. Same thing. We do the same thing that we talked about here, and we would then get you pre-qualified. We do a soft pull credit report. We would, that which is not going to impact your credit score. So you would go to my website, which is billgaylord.com, and you get to see my smiling face, and at least my picture still kind of looks like me, I think, right? It's not my high school picture anymore, but you would start and hit apply now. And that apply now would allow you to submit an application. We could do an application over the phone if it's easier for you. And then you could also book a consultation, basically, which would set up a Zoom consultation with you and me. And we would walk through those numbers as kind of what I went through earlier. So billgaylord.com would be a good place to start if you're thinking about starting that process, and then go from there.
Okay. Definitely. Okay. Yeah. Yeah. Technically, I just pretty much want to see what I needed and see if there's any breaks, like free money. Pretty much.
Well, yes and no, right? There is free money, but sometimes there's a little bit of a cost to the free money. So, but there's definitely down payment assistance, and you just have to, you know, meet the guidelines that they have.
Okay. All right. So then, yeah. So I think that'll be the first step then, just to get
Yeah.
everything qualified and then go from there.
And I don't know about you, David, but me, I don't want a mortgage. Nobody wants a mortgage, but it helps us to go over to Paula to go buy a house, right? So, and just getting that pre-approval process started, understand where you are right now, whether you're buying, 2 months from now or a year from now or 6 months, it's just kind of a starting point so that we know where you're at. And if there's adjustments that need to be made, such as your 1099 income at the end of the year, maybe you have the ability to report a little bit more income to qualify for what you want. So we do some of that analysis as well.
Okay, perfect.
And remember the seller concessions. I'm actually in a closing right now, and they gave me $12,000 towards the closing cost for the buyer. So it is my job also to help you getting some of that money towards your closing cost. And sometimes you don't even need the assistance because we have so much money on seller concessions that right now I have a surplus that I have to give back to the seller because we have too much money to buy the property.
Yeah. And Paula and I talk about it. I call it in the game. You're in the game as long as you have the money for the down payment, because then Paula does all the negotiating to get the seller to pay closing costs. But so you don't need, like, closing costs in general are probably 10 to 12,000 depending upon the price range. So if you buy 400,000, I'm just using easy math, 400,000 on FHA, that's about $14,000 down payment, right? Closing costs on top of that to try and save that, that's a lot of money. Right now, as Paula can attest to, she's the real estate expert there. The sellers are providing seller paid closing costs. So you only need right now the down payment. And to me, I look at it, being in this industry for over 30 years, it's kind of like free money. It's like, and the sellers are getting a little bit nervous. It's finally where the buyers can take advantage of the seller, as it was reversed, where the seller was taking advantage of the buyer and multiple offers and all that. But it is really shifted to a buyer's, a really buyer advantage than it has been before.
Yeah, that's really good. It's really good.
Go ahead.
I'll say that's really good. That's good to hear. That's always, yeah, anyone that's helping out, it's definitely a plus.
Yeah. So.
And mention also about the refinancing, like if they're, because of the interest rates, can you explain to them how, like, you can do the refinancing later on?
Yeah, it's a good point. So David, Peggy, and Chase Gang TV. So a lot of times there's a little bit of fear for people buying a house right now because they go, gosh, the interest rates are so high. My mortgage payment's going to be high. This is the time that you negotiate on a house to get a lower price on the house. You may pay a little bit of a premium on the interest rate and a little bit of a premium right now on the mortgage rate. But we have basically an interest rate protection mode where if you buy a house, you lock in, we have a float down option that if the rates go down by 0.25%, we can get the lower rate prior to closing. That's number one. Number two is we have essentially a lender for life program where you're going to pay, maybe, let's say today's rate is 6.5 on an FHA and they come down to 5.5. When we refinance you to 5.5, we don't have any lender fees whatsoever. So we waive those fees on our Lender for Life program. So your payment would actually just start going down. And in doing this for many, many years, there's always these little dips that we want to take advantage of. And we absolutely take and take that serious to get you the lowest payment over time.
That's good to know as well. Yeah, do you think the interest rates are any sign of them going down, or is that pretty much where?
Yeah. Yes. So the question is, we have so many global things going on right now with all over the place. I mean, I follow it daily. I do a Friday market update, but there's just no one really has certainty over what the market is going to do. Is inflation coming because of the tariffs? Is inflation coming because of the wars? Is everything going to go up? And so right now the markets are pretty much just status quo. And the Federal Reserve, Jerome Powell and the Federal Reserve is like, we don't really know. So they're just holding everything steady until they can see anything of a positive trend. Now, long term, we've seen inflation really come into check prior to the tariffs. So if the tariffs don't really create a lot of inflation, I think we'll see some of that come down. And then number two, there's a bill in the Congress for deregulation of the banking industry for banks, which are, this is probably getting a little bit too deep. This is where I get a little nerdy, but they, big banks hold treasuries. They hold 10-year treasuries, and it counts against their, what the banks can borrow. The deregulation would remove that. And so rates could naturally come down without any different economic activity by probably at least 1/4 to 0.5%. So that could be passing here really soon in that big bill that they're talking about. So I believe they're going to come down.
And what happened when they go down, Bill?
You tell me, Paula, what happens when they come down?
The homes go up.
The homes go up. Yeah. And and of course I follow it, you follow it. On the mortgage side, when the rates got down to around 6%, they were close to 6%. They were a little bit under 6% back last September. The activity went like this. The mortgage applications shot up. Then the rates went up like this because they thought the job market was bad. And anyways, I won't get into that now. They just dipped down again to about 6.5, about 3 months, 2.5, 3 months ago. And boom, we saw this big activity of mortgage applications. And I think there's a lot of people that if it gets to that 6.5% level, then we could certainly see a lot more activity. A lot of the seller concessions are probably going to be less, if not go away. It just depends on how low they go.
Okay. That's good. Any more questions that you might have?
No, those were the main ones. That was just getting started, I guess, pretty much. I wanted to see what was needed.
Yeah. So yeah, if you go to that, the website, billgaylor.com, we can just get started and then set a time and we'll go through your numbers.
Okay, perfect.
Yeah, so you went through all of this already. So we have some recommendations, and if you're ready,
I have a question.
yeah, go ahead, Peggy.
I want to know, can people with disability income that have a job, can they afford to buy a home?
Yes. So I've done a lot of loans with people with disabilities, and a lot of times, depending upon the type of disability, if it is non-taxed, you can do what's called gross up of the income, meaning because you're not paying tax on it. I don't know if that's your situation, but it actually counts as more income for qualifying. So we can use a disability income, we can use employment income, Social Security income, whatever type of income it is. And as long as it's enough income to get through the debt to income ratios and you have credit that would qualify for that, I do many, many loans with disability. A lot of veterans have the disability income.
Okay, so to find out, you just come to your office and just do a consultation with you or something?
Yeah, that would be that going to to my website. And that again, let me just see if I can have that real. My
Type it
smiling.
on the chat. Can you type it in the chat so they can copy and paste it?
And what we would do, Peggy, is we would have you either we can do an application over the phone, you let me know when, or you can do it online and we would pull up your credit. It would give us the information on your credit, your income, and how much money you have for down payment.
Yeah.
And then we would kind of put that puzzle together. It's just really those three things. We try and keep it uncomplicated as much as possible, and then run the numbers. And then once you submit it, you just book a free consult, and then we would go through and run your numbers just like we were doing here a little bit earlier, where we would run this type of thing and go through your, what I call the CIA analysis, credit income asset analysis. And we would plug in your numbers here, disability, we would all do that.
Okay, and if I'm sorry about that. What about couples when they buying their income together?
100%. Yeah, you can have, I mean, you can do 2 family, or like I've had upwards of, I think I've had at one point, like 5 people on a loan at once. I had a mother, a father, a grandmother, a grandfather, and a son, something like that. I mean, it was big.
Mhm.
So you can definitely combine incomes to qualify, and certainly, married spouse, whatever, or other family is fine.
Oh, okay, nice to know. Okay,
Are you
thank
sharing?
you.
Yes, sure. Thanks for asking.
Yeah. Were you sharing a screen, Bill? Were you trying to show something just to make sure I'm not blocking
Oh,
it?
I think I was just showing my website. That was it. Just to where to go.
Can we put it on the chat? So if they wanna like,
Yeah, I'll put it in the chat. I'm sorry.
Yeah.
I'll put that in there.
also, we put some do and don'ts. If you are planning on buying a home, do you see the do's and don'ts, Bill? Do you agree with
Yeah,
that?
I see that. It's on my screen. Do's and don'ts. Yep.
Yeah, just to make sure you don't make any drastic changes or any movements until you decide what you're doing. Don't go and buy a car until you speak with Bill.
Yeah.
Yeah.
Those are all, yeah. You're driving your house is one of the expressions that we have. And don't go buy furniture before you move in. That's another one.
Or appliances. No appliances, no new credit cards until you go through until we give you the key, basically.
Yes.
So I could read them all. I know you can read, so I'm not gonna go over all of but what will be like the main one, Bill?
The main one is, essentially do not get new credit. That's probably the biggest one. I've seen it where people will buy a car, or they'll go buy furniture for the new house, or they'll do something and it'll like impact their debt to income ratio. The other thing is, some people have said, well, I'm going to quit my job once I get the loan, but they quit their job before they get the loan. And that's a good, because at the end, we also check that. So that's good. And then I would always refrain for any big purchases prior to buying a house. So some people will go out, they need a car. We understand that sometimes people need a car and they have to have a car, but be very judicious about the type of car you get, or purchase it afterwards, if at all possible.
Or changing from a 1099 to a W-2 or vice versa.
Well, 1099 to W-2 is perfectly fine. So if David could go to W-2, we can use that income immediately. But if David was W-2 and went to 1099, then we got a 2-year waiting period because he's now self-employed.
Oh, okay, thank you.
Yep.
And those are the type of loans that we are very familiar with, right? We already talked
Do a
about.
lot of those.
Yeah. Yes.
I mean, over 50% of my business, Paula, is first-time home buyers. I love it.
Yes, and there is some, in case you're wondering where you're gonna get the money from, Bill, can you just mention the money that they can use?
Yeah, so these are all sources that people like to look at. 401k, typically you can take $10,000 out without any kind of tax penalty. You can also use it. You could get a loan on the 401k and you're basically paying yourself back. It's used all the time for down payment. Gifts from family members is also very much used. Stock, bonds, and cash, that's always good. Liquidate it. We just need to show the liquidation of funds. Credit card, no. You cannot use a credit card for the down payment. You can't get a loan for the down payment unless it's the down payment assistance that they put on there. That's the one thing. And then you call undocumented cash. I call it cash under mattress. You can't use mattress cash. So you have to have it in the bank. And, certainly everyone's got something. And what we really try to do, we're trying to do loans. We're not trying to not do loans. So we're trying to figure out how to make it happen. And so sometimes when you do have some of these things, there's ways to potentially make it so that you can use it. It just has to be done in the right way.
Thank you for that. And then we're gonna talk about the fees that you can expect during the process. And the appraisal is more like Bill, the lending side that requests an appraisal. Title and escrow. And we were saying that there is creative ways to get that closing cost to get it down. And you have to pay for prepaid taxes and insurance. The home inspection is actually to protect you, so you know what kind of home you're buying. And in some cases, the termite inspection, which VA loans require those, right?
Yes.
Even in Vegas, right? So this is like, and that would be like the only thing that you're expected to pay besides the down payment and the closing cost. Any more questions? And
Who's ready to buy a home?
Me?
David is going to go. So
Me?
what's your time frame, David? When are you moving to Vegas? When can Vegas expect to have David in town?
Well, my goal is to at least start like home shopping within the next 3 months.
Okay.
3 months. I want to be out of here before winter if possible.
Well, what I would say from the mortgage side is, the sooner you get started, because it'll last for a while, but the sooner you get started, if there's anything that we have to do to kind of like prepare or change or put that puzzle together, it's always nice to have a little bit of heads up on that. So I wouldn't hesitate to do an application now, even if you were buying, 3, 4, 5 months down the road.
Okay. All right. Perfect.
And Peggy, you said you wanted to buy too. You ready? Or maybe not. Or she doesn't know she's on mute.
She's on mute.
Or she might be ignoring us, Paula. So
Maybe she can unmute. I don't know.
No, I had to get to my microphone. I would like to be ready. I have to get my stuff together, but I really, really like to be ready. Yes.
yeah. Well, we'd be happy to help, right, Paula?
Yes. And what another? Go
I
ahead.
have, excuse me, I have my son and my daughter and my fiance. We all pay rent at different places, and we lived in Vegas all our life, so we should buy some property instead of renting in these apartments. We all pay. My daughter, she pay like 27, almost $2,700 for her apartment, and I pay
Here in Las Vegas?
1,400. Yes.
Oh, you guys, yeah, there's some really good homes that you can do, and combining income, checking into the credit, we can go through all that, and it's just trying to figure out what kind of monies you have for down payment. If you can kind of gather it all up, you only need the down payment, and then you're in the game. If you're in the game, then you can make offers with Paula, and Paula can negotiate the seller closing costs. So
Okay.
if you're paying that, because if you take 2,700 plus 1,400, you're probably looking at least, close to $550,000, $600,000 house with that kind of rent. And so that's pretty good. You're going to get
Yeah.
quite a bit. You're going to get quite a bit here in Las Vegas. Now you got to all like each other and live with each other, but we'll leave that to you guys.
I mean, these days, that's what it comes to. We have to all get along because things are very high now.
Yep, I agree. But if you want to go through that and and your family wants to go through and walk the credit income asset analysis, we can do that very simply and hopefully very understandably so that you guys know what you're getting into.
Okay, thank you. I appreciate it.
Sure.
Thank you. And another mistake is like going to the listing agent to buy your house. You do need representation from a different agent because it's like getting the same lawyer to persecute and to defend. Because what we need to negotiate. So like, don't do that. If you see the sign, please call, your realtor. Hopefully, it's gonna be me, so I can go and
Okay.
represent you. Okay?
Yeah, the
Okay.
listing agent represents the seller, not you. And Paula represents you and not the seller. So that's actually huge.
Yes. It's a conflict of interest. And they're not gonna be fighting for your interest. Also, yes, he has a contract with the seller and you can pay thousands extra instead of getting any type of help. And then also skipping the home inspection, we went over that. And I think we went over all of this. I think we did very good. We don't want to keep you for more time because you've been here for a long period. And please feel free to contact us. You have my number. I sent you emails. I'm going to send you Bill's information and his link. So if you have any questions, please feel free to contact us.
Okay, thank you. I really appreciate it.
Yes, thank you very much. It was very informative.
Thank you all. Great to meet you. And hopefully we'll get you into a home here soon.
Definitely.
Thank you. You have a good night.
Everyone have a good night.
Bye, everybody.
You too. Bye.
Be safe. Bye.